there from Wall Street. Let's see how it reflects on our Indian markets. And for that, it's our Power Prep segment. Our research team is joining in with the trade setup and the stocks that are likely to be in focus this morning. First up, Ekta is joining in with all the market cues that we need to watch out for. Morning, Ekta. We recovered most of what we lost on Tuesday and a little more, courtesy of Reliance. But what are the cues that you are picking up this expiry day?
Well, morning, Hormuz. Like you mentioned, the Sensex and the Nifty did recover Tuesday's losses, which was led by Reliance Industries as well as HDFC Bank. The mid-caps relatively underperformed, with the mid-cap index seeing a flat close. But FIIs continued to, FIIs actually bought, which was positive. They bought around 2,170 odd crores. DIIs have continued to put their weight into the markets, and they net bought around 1,197 odd crores. Now for today, it is March expiry. It is a truncated week, like you mentioned. So maybe there would be a lot of closing of positions in the second half of the trading session. In terms of cues, we have a lot of cues to watch out for overnight from the US as well as on Friday. So there will be a lot of cues on the global front, which we will be reacting to come Monday. So we have the US jobless claims, we have the US Q4 GDP on Thursday, and we have the US inflation data, the PCE data, which will be watched quite closely by the markets on Friday. All this will be reacted to on Monday for us, as well as for the US markets, because they are also closed on Friday. Now overnight, the US markets did close higher. Asia largely mixed. Oil is stable between $86 to $87 per barrel, and the GIFT Nifty is indicating maybe a bit of a quiet start. Now just watch out for the macros, because the total gross borrowing also came in, and the first half FY25 borrowing is at around 53% of the share, which is generally lower than what we've seen otherwise. Now experts say for the markets, a move above 22,200 to around 22,300 could probably pull the Nifty to an all-time high. So maybe those are the levels to watch out for. And there could be a reasonable bounce on account of the mid and small caps, which could probably continue, considering that they've gained around 5% from their March 15th close.
Plenty of cues to watch out for as it is expiry day. Thanks a lot, Ekta, for joining in. Now over to Upasana, who will list out the stocks that we need to watch out for this morning. Morning, Upasana. What do you have for us?
Good morning. First up is Dr. Reddy's. The company signs an exclusive distribution agreement with Sanofi Healthcare India. Next up is Zydus Life. US FDA issues 4 observations for Ahmedabad's SEZ Onco injectable manufacturing plant, and it is important to note that the inspection was held between 18th to 27th of March 2024. Elchem Lab will also remain in focus as US FDA issues 10 observations for the company's manufacturing facility at Baddi, and the inspection was taken place from March 19th to 27th is what the company has stated. Next up is Cyient. Even this stock will remain in focus as company announces a strategic partnership with Dewish Aircraft. Company has said that it will collaborate on the detailed design for manufacturing of D328 Eco-Regional Turboprop aircraft. That's the reason even this stock will remain in focus today. Next up is BHEL. The company has received order worth rupees 4,000 crores from Adani Power, and it is mainly for setting up Raigarh Phase 2 thermal power plant in Chhattisgarh. Next up is Chalet Hotels. The company launches QIP to raise funds, and according to our sources, the QIP size is likely around 1,200 crores and issue price at 775 per share. Next up is IDFC First Bank. According to sources, Cloverdale Investment is likely to sell 2.25% equity via block deal, and offer size is likely at 1,191 crores. Next up is Balmer Lorry. The company to set up a free trade warehousing zone in SEZ of Jawaharlal Nehru Port Authority with an investment of almost 230 crores. And lastly, GSW Energy will also be in focus as the company to consider fundraising via private offerings or QIPs or other methods on 2nd of April 2024.
Interesting names to watch out for this morning. Thanks a lot, Upasana, for joining in. And lastly, Nigel is joining in with the FNO cues on expiry day. Nigel, morning. Reliance and HDFC Bank tried doing all that they could, but they still couldn't take the Nifty past 22,200.
Well, that's right. Late in trade, actually, yesterday, Hormuz, we did have the Nifty Bank that played out the weekly expiry. So the Nifty Bank actually was underperforming for majority of the trading session. But by the time we wound up, the final hour trade, we did see a bit of a surge. And that's why it performed more or less in line with what the Nifty did. So that's an expiry-related factor. Can the Nifty Bank continue that sort of a form? That's going to be key if the markets need to move up. Let's tell you what the FIs did in the index future side on this expiry day. Well, getting to expiry day, they've added close to around 6 shorts for every 1 long position. So that's the ratio out there. The short position goes to around 69%. And in terms of absolute number, well, that number now had the net short positions from the FIs have moved to around 90,000 odd. So that's a swing factor of close to around 15,000 contracts is what we saw. Moving to the options data now, that's quite interesting. The 22,000 call, that was getting written very, very aggressively in the last few days. Yesterday, those call writers said, it looks like it's a losing battle. Let's pack our bags and move out. So there was unwinding that was seen at 22,000 call since, in fact, the markets already had moved past the 22,100 odd mark. But now the bears, they would like to defend higher levels, around 22,200, 22,250. And that's because of the call writing we did see at higher levels. On the put side, though, the bulls believe that they have got this covered at lower levels. Because yesterday, between the 22,100, 22,150 and 22,200 put, there was an addition of close to around 1.4 crore shares. So it's going to be a battle between the bulls as well as the bears. If you want to look at the levels that you're tracking, well, the broad range would be 21,900 on the downside to around 22,250 on the upside. Now, we're closer to the upper end. So in the near-term levels, you'll want the Nifty to get past the 20 DMA and then, in fact, drive on from there. While on the downside, the reference point you have is around the 50 DMA. The Nifty Bank as well is stuck in that range of the 20 as well as the 50 DMA. I will want to see the Nifty Bank actually move towards that 47,000 odd mark and take that out. If that's the case, then that surge that we're talking about on those fresh all-time highs, which is just 300 points away, that will be well and truly on. So let's see how it goes. The final expiry of this fiscal. Let's see whether or not the bulls or the bears can come on top.
The final expiry of FY24. Thanks, Nigel, for joining in. The implied open still suggesting a flat start for our markets. But the other